Hey folks, welcome back to the channel. Last November, Warren Buffett announced that he made a huge investment into Taiwan Semiconductor, a chip maker that provides most of the world's advanced computer chips. And look what it did to the stock. Look at this gap over here. It wasn't because of earnings or economic data. It was the announcement of Berkshire Hathaway making TSMC a top 10 holding in its portfolio. And the stock has been doing pretty well since then, as you can see. However, earlier this month, there's another gap over here. The stock dropped 4% in a single day. Again, not because of anything the business has done, but because Berkshire Hathaway has sold most of its TSM stock. Now, most likely he made money on this, but it's very unlike Warren Buffett to buy a large stake in a company one quarter and then dump it the next quarter. Buffett himself has been known to say, if you're not prepared to hold a company for 10 years, then don't even hold it for 10 minutes. So today we're going to look at the 14F filing from Berkshire Hathaway and try to figure out where Buffett might be seeing some opportunities given his most recent activities. So looking at the Dataroma website, this gives you the latest information for what major portfolio managers and investors have been doing with their money. And in Q4 of last year, which is the most recent data we have, Buffett made a few purchases, but he also sold a lot of stocks. Now compare that with previous quarters. Like in Q3 of 22, there were more additions to his portfolio than sells. And there you can see the TSMC purchase of 60 million ADRs, which is roughly $4.1 billion. And in Q2 of last year, you can see he did even more purchases relative to what he was selling. So this kind of tells me that overall, maybe Buffett is feeling more bearish for the market going forward, which is why he's doing more selling than buying. But let's take a look at some of the detailed activities he made this quarter. The first company Berkshire Hathaway added is LPX, Louisiana Pacific, a lumber mill company in the construction industry, and he might have just bought this because of a value play. A lot of people think real estate is going to take a downturn this year, so earnings are expected to decrease. Here is the forecast for the next several quarters, and because of that, the valuation for the company is pretty low compared to what it was over the last few years. It's currently trading at just 1x sales. And looking at the PE ratio, it's just 4.86, so about 5 times. But you can see Warren Buffett doesn't have really high conviction in this because even though he added to his position, which he already had, it really just affects 2 basis points in his overall portfolio. So it doesn't move the needle much. Also with these two companies, he added as well, Paramount and Apple. It doesn't change too much of what he already has because he already held so much of these two companies anyway. And then these are the companies that Berkshire Hathaway has sold. So we have a grocery chain, financial company, oil company, McKesson is in healthcare. Interesting reduction in Activision Blizzard because he originally bought this last year and it became one of his larger holdings because he wanted to play the arbitrage of maybe Microsoft buying Activision Blizzard. Of course, this is the video game company behind large franchises like WoW, COD, and other titles. And Warren Buffett said that the reason he bought this last year was because in January of 2022, Microsoft announced that it wants to buy Activision Blizzard for $95 per share. And if the deal goes through, which Buffett thought it would, then he can profit from the upside of that move. And that announcement came over here, like the third week of January last year, and you can see the big gap up of the stock. Now, it didn't go all the way to $95 like Microsoft want because there's still regulations and everything that has to get passed. But since then, the stock has actually been in this bear channel falling. And to throw a wrench in all of this, the Federal Trade Commission wants to block this acquisition, citing anti-competitive reasons, basically saying if Microsoft buys this gaming company, because Microsoft makes games as well, they're going to be too big, and that's not going to be fair for other players in the field. So maybe that's why Buffett trimmed his position a little bit, because this news came out in December of last year, so he could have had time to sell some of his shares. Because he hasn't sold all or even most of it, this kind of tells me he's still confident that the deal will go through, but he's just hedging his bets a little bit. Maybe this deal is going to take longer than he thought, or it's going to cost a lot of money, or there's other opportunity costs he has to consider. So he's only reduced it by a little bit, but he's still holding on to most of his shares. And then TSM reduced by 86%. So that is a huge decrease. And he sold down a couple of financial companies as well. The US Bancorp and Bank of New York Mellon. He has been selling those for quite a while. You can see last quarter, he reduced his Bank of New York Mellon by 14% and US Bancorp by 35%. And the previous quarter, he also reduced his position. So he's been selling out of financials for a while, so that part doesn't surprise me. The only two that are surprising are the Activision Blizzard reduction and TSM reduction. ATVI I can sort of understand because you can argue the circumstances have changed over this merger, and maybe Buffett is not sure about this as much as he was before. But the bigger surprise is the reduction in his TSMC. Now, why did this happen? Is it because the company's recent quarter was disappointing? Well, using IBKR, which is the platform I use for trading stocks, analysts are currently giving this a strong buy recommendation, and the medium price target is about 15% higher than what it is today. And then looking at Yahoo Finance, the current PE ratio is about 13.6, which is not that high considering how fast this company is growing. If I go over to analysis and scroll down, you can see that in the upcoming year, the company is expected to grow its profitability at 26%. And then over the next 5 years, each of those years is expected to be 21.5%. You have to expect growth to come down eventually. But even then, you can pretty much double your money in 4 to 5 years, assuming everything else stays the same. I'm also going to take a look at the Simply Wall Street website, and let's take a look at the financial health to make sure the company's balance sheet is healthy. So for short term, the company has about $2 trillion. That's new Taiwan dollars of short-term assets, which can easily cover their short-term liabilities. And not only that, but it looks like they can also cover their long-term liabilities, which is just over $1 trillion with their assets as well. So from a financial position, they look great. Debt to equity ratio, nothing to worry about. They're not going to have any trouble paying down their debts. And they also have a 2.15% dividend yield. And this gets paid out every quarter. In Yahoo Finance, you can see year over year, it's growing. This is about 0.5, year before 0.44, year before that 0.42, year before that 0.3. And finally, I'm going to go to ROIC and just take a look at their return on invested capital. And you can see it's all very consistent in the low 20s, which is actually pretty high. And if they can continue this moving forward, then looking at current valuations, this ADR is looking pretty attractive, especially if you have a longer time horizon. So you have a profitable company with growing earnings and growing dividends, and they have a pretty wide economic moat because manufacturing chips is expensive and there's not a lot of players in the world. So the question is, why did Warren Buffett sell most of his TSMC holdings? Now, we don't know the exact price Berkshire Hathaway bought and sold, but according to one analyst, the company bought it at $68.5 per share. For the ADR, and they spent $4.1 billion to do that, and then they sold it at $74.50 a share. So that's about a 9% return over a quarter, which is not a bad investment return, especially if you annualize that. So they bought it somewhere over here, and then they probably sold it somewhere over here for a nice profit. Now, if Buffett had held on to his stocks, he could have sold it over here and made a little bit more money, but I don't think the reason why he sold was to make a short profit. That doesn't really sound like Warren Buffett. He usually buys a company for its strong fundamentals and a longer term outlook because he usually thinks in years, if not decades. What might be more of a legitimate reason why Buffett sold is because in October, the US government imposed new restrictions on the chip industry. And that's basically escalating trade tensions between US and China, leading to the potential of geopolitical unrest in the future. And that could play out over an extended period of time that maybe Warren Buffett just doesn't want to be involved in. So even though just the previous quarter, TSM was like the 9th or 10th largest position in his portfolio, now it has dropped all the way down to 33 down here. And it's taking up just 0.21% of his portfolio's overall holdings. And I'm actually expecting this to go down to zero. He probably didn't reduce it by 100% and sell out completely, just because when you're offloading so many shares, that's going to move the market. So he has to do that slowly. But for the next filing with Q1 2023 activities, I would expect this company no longer being in the Berkshire Hathaway portfolio. And here we can see the other reductions that we looked at this quarter. Added a little bit of Paramount, but really that's not even in the top 10 holdings, so it doesn't really matter. The only companies that make a large enough difference to his portfolio is basically just the top 10. So from Apple to HP, these are the top 10 holdings in the Berkshire Hathaway portfolio, which makes up a total of $299 billion right now. And the fact that he's been reducing this energy company, Chevron, and also some financial companies, as we saw saw earlier kind of tells me that he's bearish on the economy overall, because you wouldn't get out of an oil company if you think demand for oil is going to be strong over the foreseeable future. So overall, I think 2023 is going to be another tough market. I'm still bullish overall, and I think we're going to end the year higher. But throughout, especially this next quarter or so, the fact that Buffett is selling a lot of his companies kind of signals to me that he's keeping more cash on hand because he is expecting another drop in the markets. The way he would say it is that he would expect prices of the company he likes to be cheaper in the future, because based on the current interest rates and economic environment, he believes that companies are maybe too overpriced, which is why his activities show a net sell of companies that he's holding. So I kind of feel the same way. We recently had a nice bull run starting from October, but I think the market is looking pretty weak right now. This is looking at the weekly chart for the S&P 500. Let me just go to the daily chart here so we can get a more detailed view. The market recently broke out of this blue bull channel, but it is coming to this black line, this 200-day moving average, and I think there's really strong support over here. So my best guess is the market's going to go up, going to find some kind of resistance, not go past the previous high in early February, and we're actually going to go down further. How much further, I'm not sure, but very likely we're going to retest the top of this pink bear channel as it's going down. And the reason I say markets are going lower is just because the new inflation data that we've had, I don't think it's currently priced into the market. And also in my previous videos, as you guys know, I mentioned all of this was just FOMO rallying, because by historical standards, the stock market was disproportionately being pushed up by retail traders and not institutional traders. So that's why any bad news in the market, like recently with the PCE results, we have seen a pretty strong correction to the downside. But this is just my guess. We'll have to see what happens. Overall, I'm still long in the market, but I am expecting lower prices in later this year before ultimately going back up again. Anyway, thanks a lot for watching as usual. Good luck with your investments, and until next time,